Okay. Let me hope we are live and clear. Let me hope we are live and clear, ladies and gentlemen. So today we are going to talk about what we call stochastic RSI. Stochastic RSI. Uh, okay. Let me hope you are seeing my screen. Let me hope my screen is live and
Yes, coach.
clear. Okay, thank you.
Yes, coach. Yes, coach.
Yeah, okay. I'll first remove one indicator. Remember, they allow you to use only two indicators at once. So, I've removed the Fibonacci indicator. Yes, I've removed the Fibonacci indicator. Therefore, I'm going to add the stochastic RSI, and we need to understand how to use it. Okay, let's go. So you will go to your indicators and you look for RSR, stochastic RSI. Mine is here. So I click on it once. It will be added on the screen. And later we need to look at the settings. Who is that one? Please don't shout for us. Put on put off your microphones. Put off your microphones. Put off your microphones, please. Okay, put off your microphones. So let's go. Let's go. Okay. Now, the stochastic will be looking like this. This is the stochastic that we are talking about. And we need to look at its settings. So we got settings for stochastic. We got settings here. And these are the settings. Here we are on inputs. So make sure your K is showing 4. Your D is showing 2. The length is 6. Stochastic length as well is 6. Okay? Then here RSI source, it is C3. That's what you need to choose. So we go to style. So on style, the numbers are only which are important. The numbers 90, 50 and 10. They are only that are important. The rest are just colors. It's you to design what you want. You get the point? The rest are just, to design what you want. But numbers are very, very important, ladies and gentlemen. You get the point? So here, when you put K and you make it blue, you should be knowing which one is blue. When you go to D and you make it orange, you should be knowing between blue and orange which one is fast. And we have seen that K is what? K is the first one to detect where the market is going. And here K is blue. The K line, the K moving average is the fastest one. It will first detect where the market is going, as we will be seeing on the chart. So this one D D is the orange one. D is the orange one. D is the confirmation one. D is the confirmation one. Now, from there, we have upper band. We have upper band. Upper band is oversold, overbought region. Yes, upper band is overbought region, which is 90. Which is 90. Then we have middle band. Middle band is 50-50. The market is in a 50-50. Are we getting the point? Then lastly, we have what we call lower band. We have what we call lower band. Lower band is 10. For the colors, you have to change to choose your colors, your favorite colors. But we need to mind about the numbers 90, 50, and 10. So from there, we save as default. We save as default. Make sure you save as default. Click on the other 3 dots down. After setting, then you save as default, then you click OK. Therefore, your chart should be looking like this. Should be looking like this. So I'm going to first make it big, then we can understand from there. Okay, now I said that the blue one, or what we call K, that moving average is always the fastest one. It is always the fastest one. So for it, it will always detect as faster as possible. That is the blue one. The orange one will always confirm. The orange one is for confirmation. The orange one is for confirmation. Hope I'm clear to you. The blue will first detect where the market is going. Then the orange will confirm that automatically we are moving to this direction. Okay, let's go. Now, I think I need to write here. This is over. It is called oversold. It is called what? Overbought region. This is overbought. Let me see where it is. This is overbought region. Then we have oversold. This is oversold. Oversold region. Now this is oversold. So what we need to understand from here, if we say that this is oversold, overbought, it means you don't need to enter the market when the market is in overbought. Meaning here the market is too high. When you see the word overbought, meaning the market is too high. Hope you are getting my point. Then when we talk about oversold, it means the coin is at cheaper price. The coin is too down. That's what it means. Oversold. The coin is too low. So we have to follow these moving averages. We have to follow these moving averages. For example, when the moving average is below the oversold region, this line is for 10. This the orange, the green line is for 10. Meaning when the moving averages are within the area of oversold, you stand a chance to enter the market. Hope you are getting my point. You stand a chance to enter the market because the market will be too low. And these moving averages will have to move from here, from oversold to overbought. Therefore, before even touching the middle line, which is the dotted one, you should be out. From here up to here. For you, you should be out. So, if you are trade, you should trade between the dotted line, which is the 50 line, and 10. This is the 50 line. Then this is why? Then this is the 10 line. This one. So you should trade between these ones, but having margin calls. Hope you are getting my point. You should be having margin calls. You should trade between the dotted one and the green one, which is line 10. Or you can trade between the dotted line and the oversold region. When the market is in oversold region, like here, you have 90% to win the market. You have 90% to win the market, as we are going to follow from the chart. As you are going to follow from the chart. When you are trading with margin calls, you'll always enjoy market. You'll always enjoy market. So, for example, now, this was our, let me get the vertical line. So we draw line like this. At that point, market was down, like here. You can see the moving averages were below the 10 line. The moving averages were below our green line, meaning the market was too down according to the RSI. Are you getting the point? Therefore, we could trade since the moving averages were too down in oversold region. So, when you decide to enter, you look at the previous high, like I told you sometimes back. You look at the previous high. Now the previous high is here. So you draw line like this. When you draw line like this, remember, we are going to enter from here. Remember, we are going to enter from here, because it's where our moving averages are too down. Now we enter from there. The take profit is at what? At the previous high, whereby at that point the take profit was 8%. It was 8%. You can see market forming what we call high at this point. This was high number 2. High number 2. Higher high. At this point here, it was higher high. Now we expect market to form what we call, you don't know, higher low. Higher low. After forming higher low, definitely we expect market to form a new high. We expect market to form a new high, whereby it was here. Higher high. Are you getting the point? Now we look it. Now let me show you. It will always move like that. It will always move like that. Down, then it form a new high, then down, then we form a new high. So that's how market will always move. Therefore, at this point, on this high, on this higher low, it was another entry. It was another entry, because the moving averages, they were in what? In oversold region. You can see. Are you watching that? I don't know whether you are following. The moving averages were at the line of oversold. Therefore, we had to enter from here, targeting the previous high. From here, targeting the previous high, which was our 4%. Are you getting what I'm trying to mean? Ladies and gentlemen, are we understanding here the point? Are we understanding the point here?
Yes, please.
Okay, that's good. That's good. So we have to look at where the market is in oversold. Look at them at where the market is at oversold. From here now, we look at this point. I want you to always use common sense. Don't just trade because they told you when the market is down, just trade. No. Now, let us first look at this point now. Let me put line as well. When I put line, we can see that what the market is talking about, what the market is talking at the top here, in where the market is going, and when you check here down here, the market is showing you that it is in oversold, whereby the market is just starting to drop. So here, I don't expect you to enter because the market was starting a new journey of downtrend. Can you see this? It was starting a new journey of downtrend after breaking the previous higher low. This was to be considered here, this point, because it was our point of confluence here, the higher low. It was our support. It was our support. So when you see the market breaking it at this point, when you see the market breaking it here, market was forming a new lower low here at this point. It was a first low after breaking this one. After breaking higher low, market was forming a new lower low. Oh, hope you are getting it. This is lower low. Don't just see and you enter the market. No. First understand what is the what? What is the direction? Where is the market moving? Is it in a downtrend or it is in an uptrend? So when it is in a downtrend, you should know that we are forming a new lower low. Therefore, the market will push little bit up and it will definitely drop again. Now, let us look at this point. We can see market breaking off our support line at this point. But again, we can see market after forming what we call a new lower low, we can see market pushing back to test the line, which was our support. And now at this time, it was resistance. It was resistance at this time because market was coming back to test it. Therefore, we were expecting market to respect this black line. After touching, then we drop to form a new lower low, whereby you can see it here. This is a new lower low. I don't know whether you are understanding this. Are you understanding this, ladies and gentlemen? Are you understanding this? That is lower low now.
Yes.
Then here we have lower high. Can you see that? Lower high. Therefore, after forming lower high, market will always drop down to form a new low. Now this one is low. This one is low. So when we draw line and we come and break, like this. Now this is the current support we have. But if we come back and break it, it means we are going to form a new lower low. A new lower low. If we come back from here and we break, it means this one will be now a new lower low at this point. You get the point? So now you can call this one demand when we don't break it. So far it can be demand as we speak. When we respect it, well and good. But according to your understanding, now can you see where the moving averages are? They are here. They are here. What comes into your mind? What comes into your mind? They are here already. And when you look at it very well, you can see that they are bending. From here. Can you see this? It means this is automatically downtrend. It is automatically downtrend. If the moving averages are not below, if they are not below at the line of 10, no trading. Line of 10 is the green one, which is down. No trading. Let's go to another coin. You may think that I'm looking at this one only. Let's go to another one. Hey, we can learn from there as well. So when you follow them very well, you'll understand why you don't need to trade or why you have to enter the trade. Don't trade blindly. Now, let us first look at this point. We can see market moving from here, forming a new high, forming a higher high. This is what? This is uptrend. This is an uptrend. So, in uptrend, where do we need to trade? We move 1, 2, testing our support. 3, we move here. It was our first higher low, meaning it was our first entry. We move. It was like that. We stop from there. Now, when you look at the previous low, previous high at this point, and we draw the line, of support or resistance, that is it, considering the previous high. Now we can see here market breaking the line and it is crossing above, but we are not seeing what we call the higher low. The higher low. Therefore, this was our first higher low. Higher low. This was it at this point. Our first entry was supposed to be there. Our first entry was supposed to be at this higher low. The target was to be on the previous high. Target was to be on the previous high, whereby it was this one. This was our target. Are you getting? So we enter from here, targeting this one, which was our 7%. When we consider down where the moving averages were coming from, we can draw the line, vertical line, draw it there. When we draw it there, we can see that. Let me first close this one and I increase this. Now this was it. Can we see this? Everyone can understand this, ladies and gentlemen. We can see that market was completely down. That line is for 10. 10 line. This one, the green one, is 10. But you can see the two moving averages, they are below 10. meaning the market is down. And according to chart, the market is completing what we call the higher low. Since we are in uptrend, the market was completing the higher low. Therefore, you could look at this point, and again you look at the what? You look at the microphone is not working. Sorry. You look at the what? You look at these moving averages, and again you look at the chart. You look at the chart. Look at the chart. Are you getting the point? You look at the chart. What is the chart saying? Are we in a downtrend? Are we in an uptrend? What is it? So you could think about that since this one is high, this is high, you could think about market to form what we call the higher low. The higher low. Ladies and gentlemen, higher low. I hope you are getting it. And another thing, you could enter this point as well. Another one is here. Another one is there. The reason why you could enter there, it is that this is another higher low. I don't know whether you are getting very well. This is another higher low. Here at this point. At this point here. The reason why it is higher low, when you draw line from the previous high up to here, you can see market was coming back to touch. And you can see the lines here, moving averages, they are bending to show you that automatically we are going to respect this area. Therefore, here it was another entry targeting the previous high, whereby it was another 4%. 4%. 4%. Let's go up to the current price and we see whether you could keep trading. Now, let us put here our eyes. Let's put here our eyes. Let us look at this point. We can see that the lines are down here at this point. But when you check up, we can see the market is trying to break. The market is trying to break. Now here, I wouldn't expect anyone to trade at this point. At this point, where are you? Here. At this point, because we had here the higher low, and we had here the higher high. So you are expecting a market to first come back, and we move and we break the previous high. For example, like this. We are expecting market to move like this, then up. You get the point? Then up. But unfortunately, you can see it is too low here. Here at this point, it is too low. It is equal highs actually. From here on higher low to here, it is equal highs. I don't know whether you are understanding that. It is at the same level. This one, I'm meaning here. It is at the same level. Therefore, this one can't qualify to be a higher low. Here, it can't qualify to be a higher low. Yet here we have another a higher low, and here it is at the same level. It was supposed to be here. Let me get it. It was supposed to be here. Here. For you to confirm. But you can see, you can imagine, it is here down now. It is here down. Hey, where are you? Go away. It is here down. Can you see? Meaning here, we never qualified to enter the market at this point. There was no confirmation for you to enter the trade, even though the moving averages were in a oversold region. But on chart, it is very different story. It is different story. So we need to compare, even though you are going to use indicators to enter the market, but again on chart, what is the chart saying? Are we in uptrend? Are we in downtrend? What is it? So if we are in downtrend, you have to be very, very, very careful. You will trade when the market is forming a new lower low. And you know, when it forms a new lower low, it will just move a bit up to form a lower high. It will move a bit up to form a lower high. You end up missing out. You end up missing out. Therefore, you have to be wise on that. You understand where the market is coming from, where the market is going. Let's have more one example. Let's have more one example. Let me go to this list. I want the coin which is up. Do we have any? We have this one. We have this one. Okay, let us see. It's a matter of understanding. Just nothing bad. You know, when I write there, that's when you understand. This is a lower low. This is the first low. Here. We start from here. This is lower low. Now we can see market breaking at this point. We can see market breaking at this point. After breaking, you can see this. This is the first high. After crossing above, this is the first high here at this point. Here, first high. Now, after confirming that this is the high, we can see market now coming back here at this point, forming higher low. Higher low. We can see a new high. A new high. I don't know whether you are following. But now, after forming a new high, we can see market now breaking the structure. This is the break of structure here. Can we observe that? Can we see that here market is breaking the structure at this point? Can we all understand that? Now, after knowing that this is the break of structure here, of course, definitely, this is no longer an uptrend. Now you can see the market forming a new lower low at this point here. Lower low. Now we start a new journey. Now you can see market starting a new journey. Are you getting the point? So here we can look at this point. Now from here, then up, then down, then up, then down, then up. This is it. Now therefore, if we were to trade here, it was good point. Here it was good point to trade, because you can see after crossing above, this was the break of structure, yes, but now we can see market again going above this line. Therefore, it was your first confirmation for you to know that the market is no longer interested in a discount level. Here, this was the discount level at this point. You get the point? So therefore, market was no longer interested in a discount level. You could make sure you consider this bending here, this bending down here. I don't know whether you are seeing it. The bending I'm talking about is this one here at this point, because here market was no longer interested to come back at the discount level after forming this fake out here. After forming this one, you could think about that the market, since we closed above this support, we expect market to first come back a bit, then we push and break the previous high, whereby the previous high we could consider this one. This was the previous one. You get the point? Now, therefore, since the lines were coming from oversold at this point down here, therefore, your entry was supposed to be here targeting the previous high, whereby it was 6%. It was 6%. And again, you can pull the line up to this level, like this. Pull the line. What are we looking at? We are looking at this point. Here, where we could get another entry. After considering the previous high, which is this one now. Now this is high. This is high. This is high. Then we can see the market now coming back to form a higher low. At this point. Higher low. At that point. Because we never passed through this line. And we can see that the previous was here. Was a bit down. This is not equal higher lows. No. This is not equal higher lows. We can see that this one is a bit high, it is a bit low, and this one is a bit high. Therefore, we could consider this point as we are drawing the vertical line. As we are drawing the vertical line like this, comparing how the market is behaving down here at this point. How the market is behaving, and on the chart, are we in uptrend or downtrend? That is only what you need to understand from the market. Just understand, are we in uptrend or downtrend? After understanding that, you have to look at the moving averages on stochastic. What are they talking about? What are they talking about? Are we coming from the oversold region? There we go. Am I clear to you guys? Are you getting something here, or you are lost completely?
Yes, we are catching something.
You are catching something. Yeah. So that is it. Maybe. Any question? Are you lost? You know, people fear market analysis. You can see you are only 16. Whenever they hear market analysis, they run. And they don't know that this is the origin of the business we are doing. Without knowing this, things are hard. This is where the money is coming from. If you don't understand this, then you will keep relying on signals. You will keep relying on signals. Yet I'm trying to teach you to also always pick your own signals. That's what I'm trying to teach you. Always pick your own signals as well. You get the point? So, after understanding this, the stochastic, whenever the moving averages are bending, you first look at the chart. Is it uptrend or it is downtrend? Simple. Nothing else you want. Nothing else you want. So you can see, no one could fail to trade at this point. No one. Unless you are blind. This was the highest level of the market. we can see market dropping up to this point here, and we can see market forming what we call the doji here. You can see the Kasmoro pin bar here. You can see that Kasmoro pin bar at this point, meaning there is too much rejection from buyers. Buyers are rejecting sellers. Buyers here are taking over. Are you getting the point? Now here you could draw your line here at this point after forming this Kasmoro candle. So that was your first confirmation, because it was end of downtrend. It was what? It was the starting of an uptrend. Then here it was end of a downtrend. Now therefore, at this point at the top here, it was what we call the supply level. The supply level. So you could draw line like this, meaning after forming this one, which was our pin bar, you could draw line as well, meaning that we have the support, the demand and supply. Now the black one which is down is demand, the black one which is up is supply. Let me change the color. The red one which is up is supply, the black one which is down is what? Is demand. Therefore, you could enter the market here at this point, targeting the supply zone. If you could wait for 2 weeks, 1 week from here, automatically you are supposed to enjoy 33%. 33%. Are you getting the point? Because automatically when you see the market changing the direction, from here, automatically the target was the supply level. Are we getting the point? Are we getting the point? Or you are lost? So, all in all, it's a matter of understanding the market direction. Nothing much. It's a matter of understanding the point, where the market is going. What is this? Is it downtrend? Is it uptrend? You are done. There you are done. Are we getting the point? Can we all use stochastic RSI? Can you explain to someone when do you need to enter the market?
Yes.
Yeah, but I'm hearing only two. They are saying yes. But what about the rest? What about the rest? Samuel, can you explain to someone that I can use what we call the stochastic RSI? I enter the trade.
Sure. I can.
He's saying sure. Hey, what about Madame Helen? Can you explain to someone?
Yes, sir.
Okay. I think the rest are absent. So, let us just first understand the market trend. It is the main point that we need to look at It is the main point. When you don't understand the market trends, then you will not get the point where to enter the market from. If you are in noisy place, microphone, put off microphone. Put off microphone. You get the point. So, it's a matter of understanding where the market is coming from and where it is going. Who is that one? Put off microphone, ladies and gentlemen. Emma,
Good.
put
Yes,
off
good.
microphone as if there is some noise from background. Now you can look at this point. Can we look at this point? The market was in uptrend. The market was in uptrend. You can look at this. Just use your naked eyes. Use your naked eyes. Let me first switch off this. First do this. Now, when you look at this structure, you know, when you squeeze the chart, you make the candle smaller and smaller. That's when you understand where the market is coming from. That's when you understand. But when you leave it at normal, you don't want to squeeze the chart and understand, then you will not understand where the market is coming from. But when you look at this point here down, I think that this one is disturbing me. First go away. First go away. Now, let me rub everything from chart. I rub everything. Rub. Get off. Now, this is the chart. We are on 4 hours. We are on 4 hours. But even though currently the market is down, but when you check on 4 hours, you can see that the market still, on this coin, it is in uptrend. The reason why is here. Can you see that? This is the trend. This is the trend line. Call this one low. Call this one low. Call this one low. Then call this one higher low. It's a matter of using common sense. Just things are not hard. Only that it's us who are making them hard. This is it. Can you see? But remember, within a trend, you can find another trend. Within a trend, you can find another trend. Now, for example, when you squeeze the chart, this one is showing uptrend. 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 You get the point? But when you look at this point here, you can see how market dropped. It was too big. So that's why I told you that within a trend, you can find another trend. Emma, are you getting that point?
Yes.
Within a trend, you can find another trend. Meaning, we can be in a uptrend, but within uptrend, you can find a small downtrend. For example, at this point, when I zoom very well, automatically, there's no one. Let me get my point here. Now, there's no one who can't see that this was the downtrend. No one who can't see this. But when we squeeze the chart, you can't find that it was downtrend. You find that the market was at normal. Are we getting the point? When we squeeze the chart, the market was at normal. It was supposed to drop to form this higher low. But when you zoom, you see that the market dropped massively. Imagine. You get the point? Just we need to understand the trends. So this one we call it pullback. Just market was retracing to complete the structure. Market was dropping to complete the structure it was supposed to drop as a must. And automatically, when you look at these highs, the highs we have, this one and this one, you can see they are at the same level. So meaning, after reaching at this point, automatically, market was supposed again to drop as a must. Because it's nowhere was the market going. Can you see this? Or you are completely lost. These highs was at the same point. So immediate after touching this line, the market was supposed to drop to form the higher low. Now from there, we expect market to push and we touch this one. So if I give you this coin to take 20%, now we'll start saying, 20% from where? I wait for how long? It's up to you. Ladies and gentlemen, you can take RIF 20%. 20%. It is there for you. Let me talk about this small trend within a trend. Let me rub. I talk about this small trend. I think we talked about to keep drawing lines on the previous low. Now this is the previous low. We have to mark it very well. This is our previous low. So in short, we don't expect market to come back and touch this area unless when we are going to change trend, what we call trend. So from there, this is our supply. This is our supply level. This one. This is our supply. This is our supply. Okay. Now, after understanding that, now let me show you another thing. Now we zoom. I show you that within a trend there is another trend. Now this was a small uptrend. This one from up to here, it was a small uptrend. But we can see market after forming this high, it started to give up. It started to give up slowly. The reason why we can see that this is automatically downtrend, we first look at the previous higher low. The previous higher low. And at this point, we have to look at this point where we had our previous higher low at this point. Therefore, after knowing that, we draw line from there. We draw line from the previous higher low. When you draw line, the line will help us to understand whether we are in a downtrend or uptrend. We can see here market forming a higher high. Hey, just a minute, guys. Just a minute. As if my power is okay. It is back. Now, I was still explaining here. We can see that this is the previous higher low. And you can see here the market forming high. Market forming high at this point. Therefore, what are we waiting? We are waiting for market to break this black line. This one. When we break this black line, it means automatically that is the beginning of downtrend. That is the beginning of downtrend. So here it was our first lower low. This is the first lower low. First lower low. And we can see here market was going back to test the black line, which is now lower high. Lower high. Then after confirming that this is automatically downtrend, what are you looking at? We can look at this point. We look at this point here. Here, this point. It is very important. We look at that point, and again we look at the previous two lows. These are two lows we have. We look at them. We are waiting for market to come and close above this higher low, rather lower high. Market to close above this one. There you understand that we are no longer in a downtrend. I don't know whether you are getting me. We consider these two like that. So after market crosses above this area, we have to retest the area, whereby you can look at this point where the market is trying to test the black line here. Therefore, here there was first retest, and here another retest. Therefore, here you could look at the entry point at that point. Are we together? Entry point. Though the target was where is the target? Target is here, ladies and gentlemen. This is the target. This is the target. For you who are long-term traders, you want 20%, 50%. This was the what? The target. So we could enter this point targeting here, which is 20%. Are we getting the point? This is a small trend within a trend. It is a small trend within a trend. Now again, this is a new journey of an uptrend here. This side. And after touching this point, we can see now market again dropping down. It was dropping down when you squeeze the chart. It was dropping down to complete the structure. Market was supposed to come here at this area, because we have here our higher low, and we have here, we are expecting another higher low at this point. That's why market came back all the way. At times, I want you to understand this logic. You can find that there is some news circulating around. But why is it that the news is always happening when we are at the resistance level? Why? You ask yourself why. The news can always happen when we are at the resistance level, and they will start saying, there was news, there is something happening, that's why the market is dropping. But in actual sense, when you look at the chart, the market is just completing the structure. There's nothing bad happening. But only that the news happened at the same time when the market is at resistance level, and you find market dropping rapidly. That is it. So when we turn back our indicator, our stochastic, we can look at it. What was it saying? For it was talking about what? When you check it very well, even for it here as well, it was showing us that it was at overbought region. When I put the line, They are at the same line. It was at the overbought region. And when you look at the top, it is also at the resistance level. Are we understanding that? It is at the resistance level. Therefore, what was happening in the market, it was 100% right. It was 100% right. Now I've shared with you this coin. Don't blame me if I post it 120% is done. Don't blame me. I've shared with you, take 20% of R. It is RIF. That is the name of coin. Even though the RSI, they are at 50 line of moving average, but according to the long-term analysis, we can look at the coin. It was forming what we call higher low, and we expect this coin to move and form a new higher high, whereby before forming a new higher high, for us we will be out with our $20, with our 20% rather. We'll be out with our 20%. Hope I'm clear to you. Let us look at this, the first higher low. When we check at the first higher low here, we draw line as well. Let us draw line. Where is it? It is here. So when you check very well, also market was in oversold region, but the market here was completing the structure to form a higher low. Like I told you, using this stochastic, you had two entries. Here, first entry, then here, this was the first one, then the second one. So the target was the supply level. So you could enter at this point targeting the supply level, whereby it was 34%. So if you had missed here and you enter on the second point here, you could look at the 20% take profit. You could look at the 20% take profit. So you can see that the origin or the starting point of market analysis is to know the market direction. That's what you need to put on the paper. Market direction. Is it uptrend? Is it downtrend? Is it ranging? After understanding that, the market will be easier for you to understand. Market analysis will be easier for you. You get the point?
Yeah.
But when you don't understand the structure, where the market is going, what is the direction, there you are lost completely.
Hello, coach.
Yes, please.
Well done. Please, there is this thing that I encounter once in a while.
What? Come again.
I said there is this issue once in a while I encounter. The RSI will be pointing down. Will be pointing down. But again, when you look at the chart is going up. How do we reconcile that, sir?
And that's what I'm trying to explain. That we first understand the direction. We first understand the market direction from the chart. Then after understanding the market direction, then we compare the stochastic. Remember, these indicators are not 100% correct. The indicators are not 100% correct. So meaning, We need to focus at market direction than indicators.
Yeah.
Yes, sometimes I have showed you somewhere the stochastic was too down in the oversold region, but the market,
Yep.
when you look at the chart, it was too high at the resistance level. So if you find that situation in the market, know that automatically there is some lagging. The indicator can be lagging. Indicator can't be 100% correct. Indicator can't be 100% correct. I repeat. Now, let me show you. Even example is here. Here. Good example is here. Now, why was this indicator showing us that this is oversold? Can you compare that? Can you enter there? Show me. Can you see? Here market, the indicator was showing us that it is in overbought, oversold rather. At that point, here. Let me increase it here. Sorry. Just let me increase it. Here. Can we see? Can we all see this? The market was the indicator itself was telling us to buy. Can you see here? It was telling us to buy. But when you check on chart, the chart market is dropping down. You have to expect that point. Therefore, if you understand the analysis, the structure, there you will avoid it. Now let us go to chart. Let me remove this one. Oh, why you can't show, please? Show. Now let me show you on the chart. The chart is telling. What is the chart telling us? What is the chart telling us? Where you are seeing this line, the stochastic was telling us to buy. Now, can you buy at that point? Let us use common sense. Who can buy at this point? You find the market here. It is here. And you buy. According what you are seeing from here, at the top here, can you buy at that point? Automatically, no, you can't buy. Because you can see the market is even breaking here. When you put line, the market is below the line. Here. Where we can say that it was our previous support. Can you see that, Mr. Emma?
I can see it.
The market crossed above the black line. First of all, it is breaking the structure.
Yeah.
Therefore, here, no one could trade. And you can't say that it is fake out. No, it is not. It can be fake out after completely changing the direction. For example, maybe if it is like this, drop down, then we move up and break. Here we call it fake out. But since it refused to go up, and we stopped along the way here, and again we dropped, that is not fake out. You get the point? That is not fake out. It was meaning it. So you couldn't trade here. So that's why I told you the other time, before you enter the trade, you first look left and right. What is happening on your left hand side? What is happening on your left hand side? So here, are you getting the point? We couldn't trade the I think I've answered you.
Yeah. The
Yes.
emphasis is to
Hey.
analyze your chart
Uh,
properly using the indicator.
So let us not rely on indicators all the time, 100% indicators. No. Indicators just simplify the work. They can show you this is the downtrend, this is the uptrend, but confirmation, let us always get it from chart. Let us always get it from chart.
Thank you, Coach.
Okay, you're welcome. Do you have any other question, my dear friends? Do you have any other question? Do we have any other question? I had shared this coin to take our 10-20%, but you know, it stopped along the way. But we are still in the range. No worries. This was our supply level. That's what I was targeting. The supply level was here. This is it. Now therefore, after closing above the previous high, which is this one, I was targeting this market to come and hit the supply, but you can see the market failed, and it is now at discount level again. Therefore, if you had missed this coin, hey, you have a chance now. You have a chance to go with it up. Automatically it will go back at this area. Automatically it will go back to this area. At least you can expect 30% from this coin. It is called R. It is called the Aero. Hey, Aero I S T A Aero I S T A. That is the name of coin. So we expect at least 30% from this coin, because it is at the discount level and it is at the strongest support. Yeah, according to 4 hours, this is the strongest support of this coin. Therefore, since it was in uptrend, we expect this coin to move and grab this supply level. So if you had missed it, please take a step and enjoy this 30% from RISTA. Hey, that
There's
is
even a Froki.
even if Rock is 2 down as well.
Yes.
Okay, let me check. It is at the list of what is it? Where is Frocky? Frocky is at Binance. Frocky is here. Yeah, Frocky is also there. So we are looking at the previous high for Frocky. We had it here up to this point. We have been trading Frocky for several times. Now we can look at the Frocky breaking the previous high. We do analysis. We don't just give signals far. No, we do analysis and we share the best. You can see this was the previous high. Now we can see here market closing above this line. So we are expecting at least Frocky to push and give us at least 25%. But now, unfortunately, market dropped. No stress. It dropped up to this level. But when you squeeze the chart, you can see that it is still in the area, yes, of buying. In the area of buying. In the area of buying. So I think next time this Frocky will break the previous high. Yes, after pushing up, it will break the previous high. By breaking the previous high, automatically you'll be around in 30%, of course, as well. You'll be in 30% as well. So for you who normally trade without margin calls, I think you can see the challenges now. Now you can understand that you are not supposed to trade without margin calls. You can see Flock dropped over 20%. So if I tell you that data use 25% to 50% to 60% or 80% drop, you don't understand me. That's what I always mean. We should have enough drop. The market can drop. May I know? It can drop from nowhere and you feel it hot. Okay? So let us learn the use of what? The use of margin calls. It is very, very important. Now you will miss the 30% because you never had margin calls. You get the point? You will miss your 30% because no margin calls. So if you have margin calls, no missing. You keep earning. I think tomorrow is Friday, not so. Tomorrow is what? Tomorrow is Friday. Being Friday, I think we will have questions and answers tomorrow. Prepare your questions. Yes, I will not teach tomorrow. We shall have questions and answers. Where you get lost, come up with your question, ask your question, whether it is concerning fast buy, margin calls, how to pick coin. There, I will reply. I will answer you. Are we together? Otherwise, as long as if you don't have question, then we call it a day. Do you have questions? Do we have questions? No questions. If no questions, then it is okay. We can meet tomorrow. We meet tomorrow in another class of questions and answers. Are we there?
Yes, coach.
Yes,
That is it. Allow me to call it a day.
Okay.
Yeah.